a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about most interesting new ETFs that have made their debut in the second half of 2022. Now, despite all market turbulence and challenges, the ETF industry continues to grow at a very impressive pace, and US listed ETFs have already pulled in more than 560 billion in assets so far this year. And in fact, they are on track for this second highest annual inflows after a record breaking 2021. And in terms of launches too, this is a very impressive year. About 400 new ETFs have made their debut this year, and which is slightly lower than the number that we saw in the same period last year, but is still very, very impressive. Now, I do these videos about new ETFs from time to time, not suggesting that these are worth investing in. These are just some interesting strategies that are worth a look. Some of them are worth investing, some of them not. They do not make sense, but definitely interesting strategies. And in fact, the trend that we have seen this year and the past few years, the new ETFs follow very specialized, very interesting, very niche strategies, because all plain vanilla, easy ideas have already been taken, and new ETFs cannot compete with those established market leaders. So this year we have seen a lot of focus on income, a lot of focus on option-based strategies, anti-ESG strategies, and we have seen a large number of actively managed ETFs. And in fact, this year, many active ETFs have been able to outperform the broader indexes because of the challenging market environment. So let's take a look at the 4 ETFs that I want to highlight. So the first one I'm highlighting is by Harper Capital. It's Corporate Culture ETF, ticker symbol HAPPY. Now, Harper is a well-known asset management firm, but they made their entry in the ETF space only recently and currently have about 11 ETFs. This ETF launched in October this year and has already gathered 222 million in assets. Pretty impressive. So this focuses on companies with strong corporate culture, as the name would suggest. And after selecting those firms, it aims to weight them in market according to their market capitalization, and then maintain a sector neutral exposure. Charges a very reasonable expense ratio of 36 basis points. If you want to learn more about this ETF, you can go to the quote page on Zacks.com, and using the link, you can go to Harper Capital's web page for this particular ETF and learn more what it aims to do. So the company believes that firms with strong corporate culture create value for investors over the long term, and it has 149 holdings currently. And if you look at the top holdings, Apple, Microsoft, Johnson & Johnson, Costco, and Alphabet are the top holdings in the portfolio. The second one I'm highlighting is God Bless America ETF, you all, ticker symbol YALL. So we have seen a number of anti-ESG, anti-woke ETFs launched this year, and Strive Capital is the most prominent of them with anti-woke ETFs, and I have discussed Strive's ETF in another video. So this particular ETF screens out firms which have politically left or liberal political activism or social agendas, and then it looks at companies with low PE ratios, attractive valuations, and a record of job creation. This is an actively managed ETF and charges 65 basis points expense ratio, has 27 million in assets currently. Again, to learn more, you can go to the code page on Zacks.com and use the link to go to the external web page, actively managed ETF, and they have some videos which outline their strategy and their investment rationale. If you look at the top holdings, Nvidia, Tesla, Amgen, Boeing, and Broadcom are the top holdings in the portfolio currently. The fourth that I'm highlighting is for Top Gun fans, Access Brendan Wood Top Gun Index ETF, TGN. So this index aims to select 25 highest investment quality firms and then hold them in equal weights. This is pretty small, 1.5 million in assets so far, a bit pricey too, 98 basis points in expense ratio. You can use the link on the code page to go to access web page for this ETF and read about its strategy. And if you look at the holdings, these are pretty different from what you would usually get in a typical ETF or your plain vanilla S&P 500 ETFs. So Agnico Eagle Mines, Franco Nevada, MasterCard, Brookfield Asset Management, NextEra Energy, these are the top holdings, and you will see that all firms are almost equally weighted. The last one that I'm highlighting made its debut just last week, pretty interesting. This is by the social media influencer Kevin. He has more than 1.8 million followers, and during the pandemic we had seen a rise in day trading and a number of these influencers. It remains to be seen whether they will be successful going forward too. What was interesting about this ETF is that Wall Street Journal pointed out that Kevin had recommended this now bankrupt cryptocurrency exchange FTX and was paid per mention. So as I mentioned, this just made its debut, 77 basis points for this actively managed ETF, and has just 1.5 million in assets so far, because it just made its debut. And so what it aims to do, it aims to hold innovative companies which are engaged in the development of new products or services or technological advancements, etc. You can read more about the strategy. Tesla accounts for 1/5 of the portfolio, 20% of the portfolio. So far, pretty top heavy. Apple is the next holding, 13% weight, and then you see a dollar bull index, 10%, and other firms in the portfolio. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer, and also make sure to subscribe to our video channel so that you do not miss anything, and I will see you next week.